Okay, let's start. So, good morning, everyone. So this morning I'll be talking about I'll be using top-down analysis, market structure theory with opening price theory to navigate uh, EURCAD and GBPUSD. So you will know that my channel is based on it's not based on what has happened in the past in the market. It's based on what is about to happen. The analysis we make analysis of what has not happened yet, and we try to use our method to navigate how price is going to respond. So we don't predict, we anticipate. We anticipate because we have a system. So because some people in the market will tell you, don't predict the market. We don't predict here. So if you see those markings are to anticipate what price we do because we understand the algorithm of how price action is. So we anticipate and we are able to understand where liquidity that pushes prices where they rest on. So because we know that, we can anticipate where price will go and how price will react at some point. And for those that have been following, you will know that opening prices are places where institutions pay attention to because they are psychological level. What figures are psychological level? Round figures, numbers. If you look at your chart, you will see them. Round figures numbers like that are close to the opening price. There's always like this you're looking at here, 17197,600. That this is an example of a psychological level because it is a round figure. 197,800. This is another psychological level. 19800. That is another psychological level. 197,400. That is another psychological level. These are levels institution pay attention to and they tend to move price from. So working with opening price theory, it is like working directly with working exactly like the way uh, uh, a BlackRock will want to enter a trade because these are the levels price will move indefinitely and move very fast. So now that I'm calling your attention to this method, you will be able to see more of it anytime and there are time factor to it as well that we've not discussed yet. Yesterday we added correlation to it, but I've not made video about the correlation. So now let's dive into this is the trade I sent this morning. The GDP JPY. We're expecting price to do what? We're expecting price to to break this level. At this level, if I move this way, you will see that this level has what? The true day open where today where price open was this area. So we have the true London session open at this area. We have the true week open that the this week the where price open this week was this area. Then we have true month open. So we have stack of true opens that is lining up. This means that we have so much institutional level around here that makes this area very strong and very reliable. So the moment we have a break and retest of this level, we should be expecting price to push up furthermore and give us at least a 3 to 1 move before New York, before the news started coming in. So, and as you can see that price has already dipped below the true week, the true month, the true London, and the true day. So we are expecting price to break back up, and you will see that these two lines here represent the 50 moving average and the 200 moving average. So we are going to be taking the entry above when it breaks the opening price. Those opening price that you see here, once price break above it, and retest, and we use this moving average as a yardstick for where we are going to enter the buy from. We already know that our entry is around this area. Once price break above it, we're going to have a breaker block, because here is another block. So once it break above it, it becomes a breaker block. So the breaker block is aligning with a 2-day open, 2 London open, and what is a 2-week open. That makes that place a fire, a fire liquidity to push price indefinitely to the upside. So that is not what we're talking about today. So if you want to know more about this trade, I analyze it and I have a video on it on YouTube. I have it on my Telegram. You can check. So let's move into the business of today. So the business of today is what we're going to analyze. Let's go for EURCAD. Okay, this is EURCAD. So at the description, I said we're going to be looking into top-down analysis to navigate this trade. So first of all, in my previous video, even yesterday in the video, I mentioned how to navigate your top-down analysis and a reversal trade. So now we go to weekly. Your top-down analysis, a day trader probably should start from a weekly perspective. So I'm going to take everything out, so that, because the reason why I'm using EURCAD looks a little more complicated at the higher time frame. So I want to help some people to be able to navigate it um, thoroughly, and having an idea of what to do. You understand? So on a weekly, um, because there's a small thin line that makes people misread market structure. There is a small thin line. So at this point, you see that market has we are bearish at this point. We are bearish at this point, but we are back. We are bullish at this point. You can see where my cursor is. At this point, we are bullish again. So we are bullish until when? Until price breaks. So now, what makes us bearish is, so why people, the thin line that makes people make mistake about market structure reading is, you're on a weekly level now, you're waiting for this swing to be broken. That is what everybody is waiting for. See if you've shifted to bearish on a weekly. No, look at this level. You can see that this level came into where came into this moving average at this level, and price band. So price bounce, and what this is a swing. This is a weekly swing, because there's no red candle that I identify it, does not make it a bullish swing. This is a swing, and this swing, we have 2 weekly candle that has broken it down. That is the first thing you have to look at. The first thing to look at is, it is not just about how large the candle of the swing is. So right now, a lot of people still think we are what? We are bullish on EURCAD on a weekly. Why? Because they are expecting this swing to be broken. They are expecting this swing to be broken, and it will be too late for an entry waiting for this swing to be broken. So now, what do we do? With understand that the first factor. The second factor is that this you see right here is a weekly resistance. This you see right here, that is a weekly resistance. So price move into the weekly resistance. What does the weekly resistance have? You will see that we even have a three top. Price came into this three top three times and bounced back to break the structure, which is this structure. Price moved back into it to retest it properly and close close below this level with a weekly candle. Now, this other weekly candle that you see here, it has tested for a premium. So this area here, it is a premium. This is a premium. This area you see here, it came in this week, which is Monday, retested at this premium. So now, if I took my Fibonacci tools and I measure this from here to where the price closed, you will see that price came into where, look at it, this is 60%. Price came into the 60% of the last week candle before it started selling back to the downside. So let me take this out so that we don't have a messy chart. So I'm going to take the parts out so that it can be clean enough. I just want us to see how we determine that, yes, we are bearish on a weekly. So now that we've determined that we are bearish on a weekly, let's determine what we are on a daily. So now this is on a daily. So let me take everything out again so that we can determine that, um, clearly determine that we are. So then let's go highs, price makes highs, high lows, and a break of structure. So a break of structure, you will see that it only did not break structure, it breaks below the 200 and the 50 moving average, and did what? Came back as a retest, give us give us like a pin bar, then started selling on a daily. So 2 days candle has already sold. As you can see it here. So right now we can determine that daily is clearly what? Is clearly bearish. Daily is what? Daily is bearish. The last high low has been broken and retested, and printed a daily engulfing candle. A daily engulfing candle, which means that today we're expecting a premium which has not happened yet. Today we're expecting a premium which has not happened yet, because it has happened but it is not deep enough. Because even if the premium is supposed to happen, we're supposed to be looking for the premium around the 200 moving average or the 50 moving average. This is the 200 moving average area, and this is what? The 50 moving average area. So you can see that this daily candle has not shifted, have not moved into any of these areas. So whatever you see here could serve, we can call it liquidity, trying to get people to that are looking for early entry to get in before they were being purged or being taken out, and then they can now start moving the price where they want to move it to. So now let's go for 4 hours. Mostly, if daily is bearish, 4 hours will be bearish. Mostly, especially when 4 hours is clearly bearish. So in this 4 hours, I want you guys to look at something. I'm going to take this patch tool out. I want you guys to look at something. Look at how the 50 moving average and the 200 moving average was kissed before, like 2 times before this sell started happening. Before this sale started happening. So, and if you look at this, if you look at this, we know that this is the premium, at least the average premium that price supposed to come into before a sale happens today. We're supposed to see a kind of deep premium before because the premium we saw was not deep enough. Okay, and we know that institutions, they will not just come here, give it to you. Now, people selling this are already feeling like, okay, they've given it to us because it's just like a break and retest. If you look at it, we have a double top, the accumulation was broken, retested, printed a 4 hours candle, boom. I catch this trade when it happens, then came back again. So a lot of people, what happened here now? A lot of people that didn't get out from here that thinks it's going to be a ride. Now, this will have scared them out of the trade. This move will have scared them out of the trade. Why? Because you that saw profit of $2,000 here, and you start seeing negative of $200 because this has already gotten into your stop loss, you want to get out to avoid a losing trade. So they got out, you and the institution keep, start selling again. So they shake out the weaker hands here. So what did you see here? We see a retracement, and I told you retracements are liquidity. Most of the time, when you see a pullback, the institution use pullback to generate liquidity. That is their way. That is what they do. They use pullbacks to generate liquidity. So it is not just pullback, they are twist and turn in the pullback that will make you want to sell at a particular time that you are not supposed to sell. That will make you want to buy at a particular time that you are not supposed to buy. So a lot of people here that bought believe that this is enough. They believe that this is a demand zone that is strong enough to pull price back, and they want to keep buying back up. So those that bought now, they are being shaken out with this move. So now let's move into that is top down analysis to 4 hours. So now that we already know that, okay, our 4 hours is already selling, and we know that market structure theory, we need to look for where the buying climax is so that we can actually know when these people and how they are planning to move price in the near future that is close, like in the afternoon or just now. So now let's go to 1 hour, because today there is strong news that is about to be released today. So we cannot mess up using a lower time frame entry because we don't know how the news is going to come and eat. It could be very shaky, and if you're trading with a lower time frame entry, you'll be shaken out, or it will mess up your psychology. So 1 hour is good enough to be able to do this. So in 1 hour, let's see how they've given that formation. You can see that price pull back into this, doing this, and you already know the strongest pullback we have for this buy is supposed to be this or this. But which one is close to the resistance? This is what is close to the resistance. So at this level, we have the buying climax. You know that we all agree that we are bearish in all time frame, right? So our top down analysis. So at this level, in 1 hour, we're looking for the retracement that is happening. We're looking for the buying climax to know how they want to move price again to the downside. So now this is the buying climax. This is the theory behind market structure. Buying climax, then we have a test already. And look at where the test is. The test is close to the true month open. So the true month open. So you can see it's kissing the true month open. Look at it. Expand your screen properly so that you can see it. So the test is at the true month open. So you will see that we've not seen the purge yet. So why would institution wants to move a weekly zone that they know that everybody wants to take this profit because it's too clear of an analysis? Everybody see this. Everybody will take it. If you don't even need to be learning how to trade. If you just have to learn how to break and retest, enter, leave it, because they know that it will be too easy to share the profit with them. People like the Goldman Sachs, the BlackRock of this world, there are plenty institutions that will rip you open to make sure that you become the liquidity to move the market. So how do we navigate this? So for you that are here with me, you should know that we are not going to be liquidity. We are going to be part of people that is going to make people the liquidity. Yesterday in on my Telegram, I was talking about the GPJPY. I was saying that the general public in the trading industry will always say, trade what you see. Trade what you see is their slogan. But I beg to differ, because if you trade what you see yesterday on GBPUSD, what will have happened? You will have been purged by what you see. I made the analysis, I made the scenario, I made a video about it, and you guys were like, is this magic? I'm not a wizard. I just understand what I'm about to show you. I understand it to the T. Then I'm about to show you so that you can learn how to do the same, and you stop being the liquidity for institution to move price. So now, because you are here in my class, you will know when everybody is selling, you are sitting on your hands. Everybody is selling, but you are sitting on your hands. Why? It's because you know that they will not just move this price without dealing with these two, these two areas that retailers has gotten. Even some institutions will be purged, because it's not all institutions that make money. Some institutions also lose money as well. So for this price to move this much, some institution has also moved this price from this area using large funds. But those that has a larger fund will take them out, plus the retailers. So how would they do that? Let me narrate. This is how, if you're using open price theory, market structure theory, this is how you anticipate price. So we already see that price is pouring down, right? And we've not seen the purge yet in H1. Okay, what we're looking at whatever price is doing. We know that the news that is coming in today is a very important news and a very murderous news. So and it's coming out at 1:30. 1:30 is the manipulation time to move price to the opposite side for institution. They use 1:30 because 1:30 is like when two sessions overlap. So liquidity overlap with news is going to be murderous. So most of the time, if news is coming in by 1:30, it serves as manipulation. News that comes in by 2:30, it's normally, most of the time, it pushes price to the direction it's going. So because we have news at 1:30, we now have news at 2:30 as well. So one of the news, the 1:30 is going to manipulate. One, it manipulates, that EURCAD also have economic ties with the US. So the economic ties, if US economy is being positive, somehow the Canadian dollar also receive part of that strength. You will see Canadian dollar also moving towards the positive. If 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 you're trading, if it's the base currency, it will move to the buy side as well. If it is the counter currency, it will move to the sell side. That is how it works. So, and never see a candlestick that is too big to be taken out. All this candle you see here can be taken out with just one candle. No, even if it is daily, even if it's 4 hours, one 4 hours candle can rocket up, take this thing out, and rocket down immediately. So why are we choosing that is going to rocket down and take the buying climax and the test out? Because we've seen so many times the institutions, they will not just move a zone like a weekly zone like this directly, not even when we have murderous news coming out at the session. And today, Wednesday, meaning that it's one of the distribution days, Wednesday and Thursday is always falling into distribution. So, meaning that today could be our distribution day because of what we've had in the week. So now we are expecting price to come here, purge this, and where is it purging at? It's purging at, it's taking out the true week open and the true month open. Then our holistic entry will be when it purges, break down into the true week open and retest it. That will be our holistic entry. So now everyone that has, you know, they think they are riding the trend, they want to ride the trend, they think they are in the trend, they are riding the trend, all of them will be taken out. So now, where are we looking at the purge could probably stop? At what point? This is a point. Why do I pick this point? This place becomes where you can see price came into this level and retested this. This is an order block. This is an order block here on H1, because once the purge happen, it's always meeting up with a BPR, a fair value gap, higher time frame fair value gap, or an higher time frame order block. So if you want to use order block, this is how to use it. It is not to use it everywhere you see order block you want to trade. No. So here is going to be our purge. This is where our purge is going to. This is our anticipation. That's not happened yet because we've done this so many times correctly, and it has never failed. Like, we are almost like 95% correct every time we do this. So we're going to be purging this area, then we'll wait for price to do what? Price to come into this true week opening price, then we can have our entry. We short. So for those that want to like ride the trend all the way, make sure your stop loss is above the purge, because we have so many news coming out. So your entry being above the purge could protect you while everything calm down. So you can ride the trend as much as you like, and you can decide to stop at this liquidation. You can decide to stop at this liquidation, take your profit, wait for price to develop again, look for your system, then voila. This is going to be how we trade today's. This is how we trade the EURCAD. So if the EURCAD did not do this, did not give us this, nothing happened, nothing spoiled. It is better to be safe than sorry, because if this is your system, if it doesn't give it to you, don't be sad about it. Move on, look for another trade, and that is how to go about it. So I'm going to ask you guys to ask questions if you have any. Anyone wants to ask questions, please? Anyone with questions, please? You can type in your question. Yeah, type in your question, please. Type in your question if you have any. Type in your questions. Okay. If you don't have questions, and then let me go to so let me go to the so since we've done with this 1 hour entry, so let's go to GDP USD. So this is GDP USD. How do we start? Let's go to weekly. So without even putting my patch to, without doing anything, you see how clearly weekly is bearish. What makes it bearish? Let me take everything out so that I can use. So you can see how bearish we are. Then right now, what do you see that price is doing? Price has come for the extreme. Look at the extreme here. Look at it. Price has come for the extreme premium. So extreme premium. You can see this is last week candle. If I take my fib tools, if I take my fib tools to measure last week candle, this is 1 week. If I measure last week candle, you see that price has gone what? Price came to the 70%. Price has come to the 70%. So now that we've established that we are bearish on a weekly, clearly bearish on a weekly. How do we? Let's check on a daily. So right now on a daily, we are, look at this level. This is now a daily, this is a daily resistance. What is meaning of resistance? Where price is resisting. Resistance. That is an English word. Resistance. Resist. Resistance. So at a daily, you see price hit the resistance and did what? Printed a daily candle, fully daily candle, like an hammer daily candle. So that is a signal for a sell. But now look at this daily candle. Look at the premium that the daily candle did. If I measure this, you see that the daily candle has not really done any premium. It did like a 20% premium. And to move a daily zone / weekly zone, most of the time institutions will want to come for at least 60 to 50% premium. So that means whoever is buying right now, by the time the news comes out, they are going to be wiped out. They are going to be the liquidity for the news. So let's go. We'll figure out our premium area. So now the retracement of those daily candle that you saw, we need to figure it out. We need to like, okay, where did this buying stop? Because if you're bearish and you want to enter a trade for a reversal, you need to, and if you're bearish and you need to enter a trade for a reversal, at your entry time frame, you're looking for the buying climax. If you're bullish, you'll be looking for a selling climax at your entry. So now this is 4 hours. So because 4 hours is also bearish, 4 hours is bearish now. You can see I've already shifted at this level. You can see 4 hours already shifted at this level. Mistake that you do, it is we are waiting for 4 hours to come here, break this swing. This is already a swing in 4 hours and it has already broken. That makes 4 hours bearish. It is not bullish because we are still seeing for 4 hours candle lining up. It has already shifted to bearish at this point. These are the minor things that your Ferrari teachers don't mention. You understand? So now our entry is going to be 1 hour. We want to see the formation, the theory that governs the market structure, the top-down analysis that we just did, how to actually enter. So we already figure out here that this is our buying climax, because what happened from this area to this area, the deepest discounts buy that we've seen is this area. This is the first discount buy that is very deep, deeper than all this discount buy. So this makes this place our buying climax. Makes this place our buying climax. So this gave us our second test type of test. You know, the second type of test, the test is going to, you know, is going to sweep the climax. That is the second type of test. You sweep the climax, then the purge will now sweep both the climax and the test. So now, test. So now, what we're expecting now is, and remember, the weekly demand that's supposed to be retested into as what? As the true week open. Let me take the box out. This is where the opening price of the week, and you can see that price has not retested it yet. And I can bet you, before the week runs out, if it doesn't retest it today, if it doesn't go beyond it today, it will go beyond it tomorrow. That is the magnet behind institutional pricing, behind opening pricing, because they are institutions. You can see what is lying there. Look, you can see 125200. That is an institutional price. That is an institutional pricing because is aligning with the week opening price. This is bigger, better, stronger than your order block, than whatever your ICT traders and what and not are telling you. This is complete price action. There is no price action without opening price theory. They don't just know it yet. There is no my top-down analysis without opening price theory. They don't just know it yet. Some people know it, they're already doing it, don't know that that is what they are doing. Because some people that trade institutionally, that trade market structure properly, they use even prices and institutional level prices, like psychological level, they use it a lot. What they don't just know is that they are trading with the opening price of maybe weekly, daily, or session. The reason why it's important to know the one you are using, because every opening price has their own function. The true week opening price has its own function. The true month opening price has its own function. The true London opening price has its own function. The true day opening price has its own function. So you can't just say, I trade with institutional level, I trade with psychological level. Which psychological level are you trading at which day? So most of them doesn't know that what just adding a little bit of this information will make your life easier. So let's continue to move on. So the true week open price, this gives us a nice target to know that price is coming. We That is when you see me like, I anticipated prices, I put in my boxes, and I'm using my part to identify prices and where prices will go next. Some people that doesn't understand this method, we think is predicting price. I'm not just only predicting price, I'm telling you where price will go. It is not because I'm the one that pushes the price, it is because I know some things about liquidity and how this institution love to trade. They will not actually move this price without coming above this level. This is the discount to trade for this week, and today is a distribution day. They will not do anything. All this you're seeing is to make you keep on selling until they are ready to take everyone out to this level. They're going to take this out, they're going to take this out, and they're going to take this and move this. So our holistic entry is going to be what? Is going to be the break and retest of the true week open, which is the main discount of today. Then we can now sell from this area and start following the trend. So you want to be a trend trader, you want to be whatever, this is where you hold your trade until the next liquidation. You hold your trade until the next liquidation. So this purge, we're anticipating it to be around this area. The purge, and our holistic entry will be the break and retest. And remember, price must be, if you're selling, your price must be below 200 moving average and the 50 moving average. And remember, your stop loss always above, if you're selling, above the purge. The purge is your the reference you have. So now, if you do this, you're going to be getting just 1 to 4 risk reward. So, but at this level, if institution move this, do this, they won't just stop here. So we're looking at another weekly level. You can go as far as 3 to 1. Hold your trade as far as 3 to 1. You will get it, because that zone is meant to push price. But once the price is here, you can do this. You can immediately break even, so your trade will be risk free. Once your trade is risk free, you can allow it to run 3 to 1. And that is that about that, my people. I hope you enjoy this. Don't forget to like and subscribe. Refer this page to your friends and family, and so that they can gain this. They can also, enjoy what you are enjoying, and gain the top-notch analysis every morning, weekly. May God give me strength to continue and encouragement to do so. So thank you everyone for participating, and God bless. So the video will be on YouTube for you to do a recap. And for those that have joined now, if you have any question, join the Telegram group, and you will see much of these things in display and how it actually works in real time. This is a real time analysis. It has not happened yet. No cherry picking, because that is what Ferrari traders do. They lie with all these things, and they get away with it because 90% of people are gullible. You understand? So thank you very much for watching. God bless.